Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We are now 3 weeks away from the start of our upcoming investor conference, the Planet MicroCap Showcase, taking place in Las Vegas at the Horseshoe Hotel and Casino, formerly Bally's, on April 25 through 27, 2023. We're about to open up the one-on-one meetings platform this week, so now's the time to go in and register if you're looking to attend. We have our full agenda up there, as well as who's going to be doing our keynotes, presenting company lists, networking events, all that good stuff. So if you do want to join us in Las Vegas, please visit www.planetmicrocapshowcase.com and click that register button. See you in Vegas. My guest on the show today is Chris Tessin, managing partner and CIO of Acuitas Investments. As the title states, Acuitas is the largest allocator to microcap managers in the world. Their microcap strategy pursues its investment objective using a multi-manager process by allocating assets among one or more high-confidence managers that invest in inefficient segments of the equity markets. I wanted to learn more about their microcap fund-to-fund strategy and their experience working with microcap managers. I've had a number of conversations with microcap fund managers in recent months, and in addition to the rough performance amongst microcap stocks, redemptions and lack of inflows have also been a cause for concern. And what's worse, everyone and their grandparents agree with this. Almost every quality microcap and small cap have taken haircuts across the board. So now is one of the best times to deep dive on names trading at much cheaper prices. Managers need inflows in order to participate in this. And this is where allocators like Acuitas enter the conversation. Chris will be doing a keynote presentation in Las Vegas on Wednesday, April 26, 2023. If you're a portfolio manager, investor, or family office, he and his partner, Doug Porter, want to meet you. Hear what Chris and I discuss, and then join us all in person in Vegas for the opportunity to network and meet with an allocator, where at other conferences, they might charge up to $5,000 to meet with folks like Chris and Doug. Our event is complimentary to all buy side. Please go to planetmicrocapshowcase.com and click the register button. With that, thank you again for tuning in to the Planet MicroCap podcast, and please enjoy my conversation with Chris Tessin. Chris, thank you for joining me today. How you doing?
Yeah, thanks. I'm doing well. Thanks a lot for having me.
It's great to have you. And before we dig right in and get started, we're extremely excited to welcome Chris as our keynote speaker at our upcoming conference, Planet MicroCap Showcase Vegas, happening April 25 through 27. So if you haven't registered, go ahead and do so. I think after you hear our conversation today, you'll definitely want to learn more and have a chance to meet Chris and the team from Acuitas down in Vegas. That's at planetmicrocapshowcase.com. Enough of the shameless plugging. Chris, this is your first time on the pod. And it's been an interesting year in speaking with many buy-side managers, talking about, issues with capital inflows and, looking at some interesting ideas, but it's just, it's been a bit of a risk-off environment in many respects. And that constrains some smaller portfolio managers at this point. And the reason I wanted to invite you to do a keynote in Vegas is to talk about being a microcap fund of funds and potentially being that source of capital for some of these smaller funds to deploy into some of these ideas they find interesting. So, let's actually start there. Tell us a little bit more about the strategy, why you wanted to do it like this, and then we'll get into your background and stuff like that.
Yeah, sure. Well, I think what drew us to MicroCap is just the active opportunity. It's a really rich. I mean, just not just the sort of total return perspective, which we can talk more about later. But and first of all, let me say I appreciate all the work you're doing. There aren't a lot of people out there consistently talking about MicroCap. We've been out there doing, sort of the missionary work in the institutional space and in the retail space with the mutual fund. But MicroCap, it's not as commonly in the conversation when it comes to the standard style boxes, the standard allocations, like you said, last year, and it's been a hard slog. Small and MicroCap allocations have been under pressure because, frankly, larger has won, and that's been a longer term thing. Not necessarily historically the case, but these things cycle. So we've seen small fund managers go out of business in the last few years during the pandemic and post-pandemic, especially ones that perhaps were value tilted during the growth environment that we had, where large cap and FANG stocks sort of led the market. And we've seen some managers really excel and gather assets from large institutions. We are an investment manager, so we don't do any consulting. We're just doing manager research and evaluating investment managers for purposes of investing. That's it. So I think it's sort of unique in the industry, and I think we've kind of become the largest allocator to microcap managers of the multi-managers that are out there. Now that's a pretty small subset in the world, but at the same time, something we're really proud of. We've seen quite an evolution in MicroCap, just from an acceptance perspective, and also from the perspective of the talent pool that's out there.
Absolutely. I mean, when you were getting everything going with Acuitas, why did you decide that you wanted to do this multi-manager construct versus just, and I think you do have an aspect that does do some, you have your individual portfolio, you pick stocks, stuff like that. But this multi-manager construct is really fascinating to me, especially for microcaps, because it's something that is so desperately needed, not just in, tough times right now, but even in good times. It's still, MicroCap is still the last one to, even when things are starting on the way up. So I'd love to hear more there.
Yeah, for sure. So it came from our time at, we have kind of a common heritage here, and that a number of the people worked at, my business partner, Dennis Jensen, and my colleague, my PM and analyst, Doug Porter, both worked with me at Russell Investments. And so from our time at Russell really evolved from a pension consultant, kind of, launching the pension consulting space many decades ago, to running money and evaluating investment managers and placing allocations with those investment managers in a multi-manager construct. So that was their purview. And I had done a few things before on the direct investment side and on the sell side, but Russell is really where I learned deep fundamental manager research. And my view was it could be applied most efficiently down the cap spectrum, right? The least efficient corners of the equity markets. Those are the places most ripe for multi-manager. And MicroCap was really the flagship in that regard. That was our first product when we launched Acuitas. That was where we felt there was appetite. We saw large plans like, state of Alaska, state of Michigan, making direct allocations to MicroCap managers. These were big institutional asset managers making, multi-hundreds of millions of dollars in allocations. So there was opportunity there, and it was early. If you looked at the universe of investment managers in an eVestment or something like that, there were like 12 managers that populated the database. Didn't mean there were only 12 in existence. It just meant that, those are the folks that were filling in the blanks. Now there are many multiples of that, and even more it's incumbent on us to find, but even more out there that are buying these microcap stocks. So I think the opportunity was, my purview at Russell was small and, sort of small cap and SMID all the way down to microcap. And I had money with microcap managers, and it was really the best source of excess return among the products that I ran. And we thought that could scale. We thought that would be interesting at a standalone organization. A multi-manager was really compelling because it's an efficiency for large plans that don't want to invest with a bunch of little managers and don't really have the capacity to do the research on what could be a smaller allocation for them. So that was really kind of the genesis of it. And that was, we launched 1111, which is now about just over 12 years ago. And really pleased with where we've come from there.
For sure. And look, I don't want to give too much away because you're going to be doing a keynote in a couple of weeks anyway, in terms of criteria.
Make sure I keep some surprises.
Yeah, why not? But I mean, but I'd love to hear your criteria when you're evaluating potential managers for allocation.
Yeah, it's really a fundamental research process. Involves a lot of discussion. And again, we are only invested from, we only do multi-manager, investment manager research and investment in those managers. So when we do both outreach and accept, folks that come to us, now I think we have enough of a reputation in the industry where, like, the pension consultants will, if somebody comes to them who's a microcap manager, they will ask, have you spoken to Acuitas? We love that synergy because we want to speak to everybody. We want to know everyone out there. You never know everyone, but we try to, and we try to keep an open door about it, and not have sort of these constraints that can cost you from an investment perspective. In other words, you don't have to be around 5 years. You don't have to have 500 million in assets. You don't have to have all these sorts of things that get in the way when it comes to getting institutional allocations sometimes. We want to know people early because we think those early days are can be the richest part of the life cycle from a return perspective. So, I mean, the things we look for are all the things you think of. A lot of it comes down to process and philosophy. A lot of it comes down to the passion that the investment manager exhibits. We spend a lot of time on the portfolio. There's sort of, we've done presentations over the years, the old 4Ps and the new 4Ps, and but in many ways it hasn't changed. We once had a consultant ask us, sort of, how do you get to know a manager in like the first, with just an hour sit down? And we're like, an hour sit down, that's a handshake. that's the intro. The first hour is the get to know the process, but that just scratches the surface. We need to have every stock in the portfolio. We need to have historical attribution. We need to dive into the process to see if there are characteristics of the process where there might be, more of a risk than others. Every subset of manager's sort of sub-style has its own characteristics that a manager needs to win. Very high growth, high momentum, high turnover manager requires a different set of characteristics to win and outperform the market than a very deep value manager. If the super high turnover manager tells you, we write 50 pages on every stock, well, you're probably missing a lot of the stocks that would fall into your purview just from a timing perspective. If the super deep value manager gets comfortable with a name in a half a day, well, then they're probably not doing the required research on that deep value name, which may be cheap for a reason.
Absolutely. So my next question, and please tell me to screw off if you're not even really allowed to answer this one, but if you can, I mean, what's the typical allocation size? Or, I mean, I'm sure it's all dependent on the manager, and you might, add more or take out or have some redemptions, but what's a typical allocation size per manager?
Yeah, well, it varies. We currently run a little over 800 million in MicroCap, and there are managers where we have over $100 million. There are managers where we have, closer to $1 million, our starter position in a small allocation. What we do is we generally create separate accounts for our end clients. So, for example, you're a corporate pension or something, and you are interested in in a higher return focus for your small cap portfolio, for your equity portfolio, really. And you think about incorporating microcap as part of kind of your small cap allocation. The size of it depends on kind of how you think of it. Some people, it's half their small cap allocation. For some folks, they view it as a market cap weight, and it's much smaller than that, a couple % of the overall universe. But that said, with the size and scale of some of these pensions, they can be large. We've seen pensions make or look to make allocations, from the single millions to, $700 million to areas like microcap. So the dollars are out there, and there's nothing that's totally typical for us. It's really dependent on the client, because we'll build a custom portfolio of investment managers for that client in many cases. There's also a commingled product in our mutual fund, which is a stable of managers that individuals can invest in. But really, there's no standard. But as we grow, our ability to make allocations grow.
Absolutely. Mm-hmm. It's interesting because, like, obviously, I'm, marketing our events. You're going to be there. I'm being super annoying to everybody. And, it's interesting. Some portfolio are like, oh my gosh, I can't wait to meet them and have a conversation, shake hands, meet Chris, meet Doug, meet the team. And then I have other fund managers like, we're closed up right now. The fund's closed. And like, how do you answer those questions? Because maybe it's a manager that you're like, oh, I really want to work with you, but you're telling me it's closed. Like, really? Okay. I mean, how do you have that conversation?
Yeah. And, implementation and capacity is really important down in MicroCap. And if anything, one thing that we've done that I think is unique to Acuitas, we're sort of capacity junkies, right? We like to look at how much money a manager invests, because assets matter and assets can impede performance. And you know that from everyone you've talked to, but it's important to sort of invest early, and we make it more of a priority to be early in the life cycle of a MicroCap product. So we're often the seed assets for a MicroCap product. We might talk to a small cap manager that's 20 years in the business and has a great track record and an exceptional process. And we might find from the attribution work that 80% of their alpha has come from the smallest stocks, what are effectively MicroCap stocks, right? No big surprise. This is where the returns are. And ask them to run a concentrated MicroCap product for us. So not only are we out there trying to meet the folks that are managing MicroCap, but we're also talking to folks that are managing dollars in MicroCap stocks and having them sometimes customize for us a product. And I think 90% of the products that we've allocated to, we've been the seed assets for that product. And that's been core to, I think, generating our returns and sort of the progress of Acuitas. But as it grows, we don't want to be the last dollars. I guess to answer your question, we don't want to be the last marginal dollar, right?
Of course, yeah.
If it's closed, it's closed. Good luck. If it's close to closed, go off, and best of luck to you, and we'll support you and try to be a good part of the ecosystem. But really, we're interested in the early days, because from an implementation perspective, managers have a real benefit.
Hey, Chris, I got to ask a dumb question. It's like my favorite thing to do. You've listened to a few shows. I like to ask a couple dumb questions every once in a while. Yeah. Like, I mean, maybe I'm wrong. Maybe, like I said, I might be just ignorant of this. But, in doing my research and wanting to find, someone like an Acuitas to speak in vague, like, I'd never heard of Acuitas before. I mean, great. We're getting started here with some of the market. Me and you were talking, you're going to do the presentation in Vegas. But what's been, how do you typically market what you do, and why don't more MicroCap portfolio managers know about you guys?
Yeah. Well, I think there's some balance of it, the profile of managers that know about us. If they are kind of focused on the institutional space, as opposed to perhaps a little more retail focused, it's less common for a MicroCap strategy that's perhaps incubated within an RIA or a wealth management firm, or some, an individual who's done it but perhaps hasn't managed money before. Those folks are buying MicroCap stocks, and they may be doing it incredibly well, and we want to know them and understand the prospects for them. But what's more likely for us is, folks that have managed money in the institutional space, that are in the databases, are the easiest to find. But of course, we kind of pride ourselves on going far beyond that. And often they come to us because they've gone to the major pension consultants, who are often sort of a gatekeeper for institutional assets, public and corporate plan sponsors, that sort of thing. And and then the pension consultants have sort of said, have you spoken to Acuitas? That's one way that we get managers. One other way if we find managers is to, we might back into the stocks that they own, see who the holders are. As far as Acuitas getting visibility, I think we've built up a great brand by just being, vocal with that pension consulting community, with large plan sponsors. We have not made a big splash on the retail side. We haven't really pushed super hard. We do have a mutual fund, which I think is a great and really efficient vehicle, but that's one of the reasons, you're not going to historically, you might read about us, quotes in the journal and things like that, but we're probably not in Money Magazine because we're not out there doing press. The focus of the firm since inception had been on managing the money. My partner, Dennis Jensen, and I, who launched the firm, really did it with a focus. We were doing the marketing, we were doing the investing. We were building the firm thoughtfully. We have some really great blue chip clients. Some of them are, among the 10 largest pensions in America. But we weren't really going for kind of a retail presence. And so that may be why, our brand isn't as widely known in just in the broader community.
Oh no, and that's totally fair. And I figured I'd ask because I was like, I couldn't believe, some of the folks that I know.
Our paths haven't crossed yet.
Yeah, I was like, what? How do you not at least know who they are? And but that makes sense, because there's a lot of, especially on the microcap side, it can probably, and I apologize for any fund managers hearing this. I'm not meaning to offend, but it sometimes could be a little bit intimidating speaking with more on the institutional, capital allocators versus some retail where not saying you can bamboozle them by any means, but it's a bit easier. Hey, this is what we do. This is how we do it. Go to an institution, like you said, an hour is just a handshake, versus some of the, versus maybe talking to some other, individual retail investors that just want to invest in your fund that, maybe the hurdles are a little bit lower. You're not throwing 100,000, 500,000, you're starting $1 million. Right. So that's a much bigger hurdle and difference than some, individual investors that are going in that are accredited, of course, that are going into some of these funds. So, I mean, from your perspective, when you're dealing with portfolio managers that are are doing their thing in microcap, I'd say the number one thing that, a lot of them run into is, now balancing their passion, which is investing, and the business. For you, what, in your experience in working with certain portfolio managers, what does the most successful type of balance really look like to you?
Yeah, balancing the business and the investment side is an interesting one. I mean, we find a lot of great investors that can't market their way out of a paper bag. We found a lot, I'm sure you've met some of them.
Oh yeah.
Really, really incredibly
great investors though.
Absolutely. And we don't want them to necessarily be out there, marketing day to day. For us, when we allocate to an investment manager, we want them, picking stocks and generating returns for our clients. But you have to balance the need to grow and have a viable firm, especially if it's just investments that you're doing. If you don't have a wealth management side, if you don't have a larger firm where you're just a part of it. The interesting thing is in microcap, the larger firms, in some ways that's a risk for us. And it's also an interesting one in that they typically don't make the investment into a microcap product. So if you look at kind of your, largest investment managers in America, they tend not to have microcap products, right? Because the products don't scale. They sort of ask themselves, what could we run in it? A typical microcap manager might say we could run 500 million. That might be too much for us. Our capacity work might say it's much lower. A very large firm could say, why would I even have a product if I can't run $1 billion or $2 billion in it? So they don't do it, or they pass it off to a junior analyst who's not as experienced. We only want great investors that are focused on this area of the market where we think they can make the most impact. So it's an interesting balance. And we've seen pressure on small cap managers because small cap, hasn't won. It's gone through a dry period. And we think there are a lot of things pointing to that ending. But suffice to say, we've seen, small cap and microcap managers go out of business in the last few years. It's an interesting balance because they need to grow, they need to market, need to gather assets for their product, and sometimes performance is not enough. They may not gather the assets that they need to sustain the business, or they may aim for very high fee business, but that's not what the institutional space is willing to pay. And maybe the more family office and RIAs are willing to look at those products, but hard to scale. So it's an interesting balance. For us, you find more folks in microcap that are part of a small cap boutique that often have a small cap like Russell 2000 kind of product, and that can sort of pay the bills for them. And that while the microcap product scales, that's probably the most common. There is
true.
Yeah. And
so true.
For individuals that are just running a microcap product, they may have, other pieces of business that help them, support their efforts. Like they're part of an RIA, they're part of a family office, they're trading their own account, whatever it is. But from an institutional perspective, these are things we have to balance. There's a real, and I think it's there's a benefit to our model in that we're doing the deep research on the firm and on the investment manager. A lot of work goes into the compliance and ops section, which that could be a whole separate discussion. But, there's a 15, 20 page document we have on every manager that we invest with just for compliance and ops. Because, the investment side is great. That could be, a dozen meetings to get comfortable with the manager. But we'll never go forward unless they have the sort of compliance and ops capabilities necessary for institutional allocations.
Well, what's interesting, and listen, I say this without trying to blow too much smoke, up but at the end of the day, I mean, Acuitas seems like kind of the ideal partner you'd want to work. I'm trying not to blow too much.
I like to think so. Yeah.
But here's from the following perspective, because you think about some retail. And, obviously, like if they want to invest with you, that's great. But that's trying to establish the time horizons with them and understanding that, hey, especially in microcap, like, I know quite a few managers that have probably listened to, some are 2 years where they try, looking for ideas that will, materialize within 2 years. Some are looking at ideas that ideally they're holding on for, anywhere from 5 to sometimes 15 years, and when you're dealing with retail, that is sometimes a really difficult thing to convey. There are some that get it and will go along for the ride and do that. But that, especially in this environment, is few and far between. Like from your perspective, the space well enough to know that, like, all right, we're getting married, we're for a little bit. It ain't just, most often it's not just 2 years. I mean, unless it's like severe underperformance.
Yeah, right.
But for the most part, you're looking at somebody that you want to invest with for 5, 10, 15 years. So I'd love to hear some more of your perspective on that as well.
Yeah. We're really looking to be investors, not traders, especially when it comes to microcap managers and allocation. So that means a lot of work on the front end. So that means, and it starts with the idea generation of getting to know people and having an open door and being willing to, dig deep and evaluate managers that are out there to find the great ones. And then when we've gone through that and spent the time with the manager and we're ready to sort of bring them to our buy list or take them to investment committee, as it were, we have a bullpen of managers, and we're generally trying to get assets to those managers if we're winning new mandates, or perhaps there's a replacement cycle or something like that. But we really try to be a good partner. We try to, and I think testament to that would be just asking the managers. We always say this to our prospects that we hope become clients, that, talk to the investment managers about the research that we do. Ask them about the questions that we ask them if we're a good partner, all those things. And they've been some of the best sort of resources for us. We had one investment manager, I'll tell a quick story, New York-based investment manager, that we terminated. They were growing up and had larger asset base than we wanted. It was starting to impede performance. And we had the opportunity to move to another manager. It was sort of one of these typical, buys, replace the sells. But we'd been with him a number of years and known him for well over a decade, and had to call them to terminate them. Never a good, fun call to make. But basically, in the phone call, he said, "Oh, by the way, if you ever need me to be a reference." And I was like, you know what? This has never happened before. I've never terminated a manager and then had the manager say, "Hey, I'll be a reference for you anytime if you're ever looking to win business somewhere else." And that's when I guess at least you feel like you've treated people well and you've been a good partner. This has been a productive partnership. We're not impeding their business in any way. If anything, we support it. We're moving on for reasons that we stated when we very first made the investment. And if you're consistent with that, I think people respect you for it.
100%. So, you mentioned actually in one of your answers a couple questions ago saying that, you're starting to, obviously the last year has been just a year and change has just been kind of awful for micro and small caps. I don't mean to laugh about it, but laugh to keep from crying, really.
Yeah.
So, but you did mention that you feel like it's starting to turn a little bit. So in your opinion, what are you seeing that's making you think that?
One of the things we've been writing about for the last number of years was just the characteristics of leadership in the market. When we're looking at it there's a couple different ways of looking at it. There's a total return perspective of sort of like, small and microcap has lagged large. And then there's the excess return environment, sort of the active environment of how easy is it to beat the index or to outperform or to, we're in microcap because we think it's the richest place for active management in the equity universe. And more people now agree with that in the world than they did 10 years ago. So that's positive progress for us. I'll start with the active environment where we're in a better environment for active. We're not in the FANG growth led high, large cap and growth led environment. Valuation has mattered more. And active investment managers that prefer characteristics like levels of debt, higher forecasted growth rates, cheaper on a valuation perspective, higher in quality, ROE, ROA. Those characteristics have been rewarded in this environment. So interestingly, even this year where we saw this big swing where micro was up 12% at one point through, I think, February 3rd, and then has come all the way back and is now negative.
Yep.
But even with those sorts of swings, it's been a good active environment. We're having one of our best active quarters ever as far as excess return to the indexes. Part of it is because just if you look at the characteristics in aggregate, some of the things that managers favor and are being rewarded. So that's an interesting one. And we think that's going to continue. We're not going to return to the negative earners leading the market, to the, feeling like it's 1999 all over again and companies trading at 25 times sales, all those sorts of things. The other side of it is there's always the who cares about microcap, and this is, I guess, a perfect forum to talk about that. But small has lagged, micro has lagged. What turns that? When you have sort of this improving economy, and then some of these small companies tend to do really well, but we've got to get to the other side of of this recession. I had in our last quarterly commentary, a visual in there with Austin Powers, driving the sort of slow moving, road smoother. And
yep.
And there's a guy standing in front of him 100 yards away yelling, "Stop." That was sort of the market, in 2022. It was reacting to the economic slowdown and sort of the greatest forecasted recession ever. Now people are sort of looking, so when are we going to get past that? When are we at peak rates? When does the recovery happen? When that happens, small and microcap stocks are likely to lead and do really well. And they're a bit of the tip of the whip. And I know, managers and you understand this, but when there's a bit of a crisis, they'll fall farther and faster. But when there's a recovery, they're going to be more aggressive and win on the upside. And through all of that, you have a better environment for active. And that's the whole reason to be in it,
Yep. And yeah, I
Yeah.
I seriously agree with everything that you just said. I don't even have anything more to retort. I mean, it happens time and again, right? Like every time we have one of these recessionary environments, you can think back to 2009. I mean, that's made careers from folks that were extremely active during that time, and it's hard to pick timing, and especially in microcaps, because you can listen to every conference call or meet one-on-one with management and hear an interview with me or whatever, and company says they're going to be doing all these things and they end up not, and you just pick the wrong one. But but at the same time, there are those that just do deliver.
Yeah. And it's interesting the active management environment. I mean, microcap has always been really interesting for us because we sort of view it like, major league batting against minor league pitching. There are fewer institutional investors down in microcap. The folks that are really thoughtful and can dig through the stocks and find the next generation of winners have a real advantage because there's less sell side coverage. There's less, institutional involvement. More of the buyers that you're kind of competing against are individuals. They might be, local folks or company insiders or whatever it is. And when you get up into large cap, I mean, there are firms that just dedicate themselves on the sell side to specific large cap stocks, one stock, just we cover this stock and that's it. And you're probably not going to get the marginal piece of data and learn something from management or have a deeper view. You have a view and on timing and all those sorts of things. But when it comes to insight, you visit a microcap company. When I was on the sell side, I covered some large cap household name firms. And, you ask generally the same question everybody else is thinking. When you're a microcap investor and you go on site to visit the factory to a microcap firm, you're going to get the tour of the plant. You're going to get a mint at the end. You're going to get a real sense of the direction and the ability of management.
Get a key to the city.
Yeah, right. But you're going to get a sense of, are they going to be able to, to come through and execute the plan?
Yep.
That's what you're looking for. Are these folks going to be able to execute? Is management competent? Are they going to be able to execute? And you have better insight into that for a small company, especially single business line sort of thing. Then it's easy to get lost in the conglomerate.
100%. 100%. I got to tell you that I had to write down that analogy you gave about, it's major league hitters against minor league pitching. That's just beautiful. I might put that on my wall. So baseball also happens to be my favorite sport too. So like you got me. That was
great. Yeah, I didn't even know that. I should have done my research before.
Oh man, come on now. But another question I had for you today, obviously you've been doing this a long time. You talk with managers all the time. What have been some of the memorable lessons they've gotten from some of the great investment minds they've spoken to and worked with over the years?
Yeah, I mean, there are quite a few things. I'm trying to think of, process matters. Surrounding yourself with great people matters. Ego eventually sort of impedes performance because it means they're probably not listening to the folks that they should listen to, and have less ability to be objective about investments, about firm, about decisions they make. And there are there are lots of great things about that we've learned as well, mistakes that we've made, but about we've seen managers overextend themselves. We've seen managers not build from within and recognize great employees when they are growing in their roles and taking more responsibilities. We've seen, folks managing too much as far as an asset perspective is a big one. It's really easy to keep the faucet on when assets are growing and times are good. And it's also easy to be sort of full of hubris. And we've seen that many times, the pride before the fall, where returns are great, they come out with the marketer who's got the great hair and the great handshake, and they're making the grand tour of everything's exceptional. How could you not love this? Look at the numbers. But there's more to it than that. You have to dig into the process. You have to dig into their ability to implement today forward, because you don't get those returns historically. Somebody comes to you with great returns and says, I'm the microcap genius. Look at my numbers. Well, you don't get those numbers. All you get is today forward if you invest. So if they're managing, $1 billion in microcap stocks and they can't buy something below 500 million because they wouldn't be able to trade it in their portfolio, well, guess what? Then you have to run the numbers and say, what does that 500 plus pool get me? Where are they fishing? Is it a rich pond? And are they a great fisherman? And that's kind of what you've got to get it down to. So that takes real work. And, we've met some great investors over the years. And sometimes they've been great investors at great firms. Sometimes they've been great investors at not great firms. And we have an opportunity with them later in their career.
Have any managers, like, let's say, you guys establish a relationship, you're not allocated with them. I mean, do some managers use the fact that Acuitas has money allocated with them as almost like a validator?
Sure.
Yeah, because that seems like a no-brainer.
Yeah, we've had people follow us on investments, other large firms, and other firms that do manager research as well. We're open to, when we invest with an investment manager, we don't limit them from telling others about our allocation. There are firms that do that. I don't think it benefits the investment manager. I don't think it benefits the ecosystem, right? There are ways, it all comes around. And so we want to support the investment managers in their growth and their success. And when we've done we don't broadcast our investment manager names, because obviously that's our intellectual property. But that said, when we have an allocation with someone, they're free to let people know about it and market our presence. And in some cases, that's been really helpful for them and helped them grow the business and close the product. And, we move on and they're gaining full fee business, and it works out for everyone.
It only makes sense.
Yeah.
So another question for you, and we've kind of talked a little bit about, a little history of microcaps and all that stuff. But I mean, for you, how have you seen, from your perspective, how have you seen the space evolve over the last 20 years? From you've seen it with investors, allocate the whole bit. So I'd love to hear your perspective there.
Yeah, I think the biggest thing is, we've seen a broader acceptance of microcap and institutional portfolios, right? It's never going to have its own little style box that's on, small growth, value core, all those that's standard, but more people have thought about it. There have been more institutional pension consultants in the last few years that have written papers about, why microcap is a proxy for private equity. If you go to our website, you can read our white papers about the case for microcap. Microcap is a proxy for private equity, microcap in inflationary environments. On and on. But just broader acceptance of the space has been primary. And some of that came from, I feel sometimes like we've been sort of the Forrest Gump of microcap, because we were there when it haven't been around that long, but but enough decades that when I've been on the direct investment side, but when I was at Russell, they were launching the MicroCap Index. And I think that was a tool for investment managers, just as their Russell 2000 index became a tool for small cap investors, to have like sort of a proper bogey. The MicroCap Index became a tool for investors to sort of evaluate themselves by, and for institutions to say, okay, well, I can at least see what microcap is and have some understanding of market cap, size, number of names, all those sorts of characteristics. Throw out the garbage there's no penny stocks, there's no stocks that don't trade, there's no pink sheets, there's a lot, these are, institutionally investable stocks. And then we saw the universe go from, at that time when we did the research on the index, there were, like I said, maybe 12 folks and investment managers that populated the database. And now many multiples of that, and more out there actually investing, as many of the folks you've talked to, investing in microcap stocks, some of them exceptional, but it's so this acceptance has really been part of the the positive evolution in microcap. We're continuing to see that, and so as we write about it, and now it's one of the current topics is the public versus private. We've seen so much money go into private. Even today, there were some articles about large pension consultants saying we're not allocating additional money to private. There have been some upheaval in private with the banking crisis recently. So for the folks that are staying into liquid, equity investments, that's very transparent, that's highly liquid, like microcap and small cap, it's a true alternative to private when private starts to get, maybe not as compelling.
That's for sure. Especially in times like these, there's been a bit of a comeuppance in that respect. That's for sure. Wow, we've covered so much here today. I want to just keep talking, but at the same time, I want folks to, have the chance to hear everything that your full presentation in Vegas and stuff. So let's close it out with some parting thoughts on it. Listen, you're going to be on here more than once. This isn't we're mishpucha at this point. So, to close this out here today, in advance of Vegas, what would you say is some of the parting thoughts that you'd like folks to better understand about you, about Acuitas, and that maybe reasons why they should come and meet you in Vegas? At least, that's where we know you're going to be there, right? So,
if you are an investor in microcap stocks, we'd like to know you and understand what you do, even if it's just an initial introduction. And there might not, there may be an opportunity to work together. There may not be. Some of that depends on the manager, the profile of the manager, our needs, and those sorts of things. But I really applaud anyone who does the research down the cap spectrum, buys these stocks in what I think is the richest corner of the equity markets for active management. That is our sole purview. Acuitas as a firm only does small cap and below globally. That's it. We're the only multi-manager that has this purview. Everyone else who's sort of boutique multi-manager like us will do large cap, mid cap, all cap, you name it. We just want to know investors in small and microcap stocks. So, interested in always understanding the universe. We think we offer a really compelling investment for the end clients in the sense that they have an efficiency with us and that it's a single line item that invests into microcap that includes what we view are the brightest minds in microcap. And we get there through deep fundamental research. There are a lot of great things happening right now in microcap from the perspective of valuations are very cheap, much cheaper than in large and mid cap and even small. There are a number of things pointing to a rebound for small cap versus large, and microcap will absolutely be the tip of the whip when it comes to that. We've seen it. We saw it in the first month and a half of this year. I think that's just a preview of what's likely to happen longer term as we step closer towards a market recovery. And that may have been accelerated by some of the recent events. So look forward to meeting some of you and listeners in Las Vegas. Really appreciate the work that you're doing on the podcast with MicroCap. There aren't that many people focused on it, but we want to know them all. And it was great to sit down with you today.
100%, Chris. Thank you so much for your time. I really do appreciate it. Where can folks go and find more information on Acuitas, and then I'll do my closeout.
For sure. You can go to acuitasinvestments.com, which will have contact information for us and information about our products and the investment folks. And you'll get to meet Doug if you come visit us at Las Vegas, and love to introduce you to the rest of the team over time.
Awesome. Thanks. Chris, thank you again for joining me today. Really do appreciate it. Good luck. Stay safe. And I'll see you in Vegas.
Thanks very much. Okay. Take care. Bye now.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.